Do you want to achieve payouts like these every single week or every single 2 weeks? In 2025, it's absolutely possible. Guys, making $10,000 a month is actually not difficult whatsoever in 2025. I want to show you exactly how you can make $10,000 every single month and how me personally, as I just showed you, I'm making $10,000 a month completely, simply, very easily with propfirms and personal accounts. For those of you who don't know who I am, I'm Arman. I've made over $400,000 in propfirm payouts and withdrawals with my own personal account with IC Markets. I'm going to be showing you exactly on my screen how you can do the same exact thing and make $10,000 every single month trading propfirms, which are the best vehicle to build up your capital at the start of your journey. So you end up building a 50k to 100k personal account, and then you trade your personal account and build your track record. This way you can in the future have investors that will give you money for you to trade. And trading is very simple. Most of you overcomplicate trading. I want to show you exactly how you can simplify trading, have a very mechanical edge in the markets so that you can over and over repeat this edge and absolutely profit from it with ease. So guys, let's go on the charts and on my screen, and I'll show you exactly how I've been doing this for the past 5 years, and you can do the same exact thing by exactly copying my blueprint. So see you guys on the charts. Let's get into this. I want to show you how you can make money with propfirms. First of all, for those of you who don't know what propfirms are, in simple words, propfirm is a trading firm that gives you capital that you can trade, and there's conditions to getting the capital. They usually have an evaluation phase, and in that evaluation phase, you need to make a certain amount of percentage, and then once you make that, that's their target basically. For example, right here, as you can see, most propfirms will have a phase 1, like right here, and they will have a phase 2. These are the two-step accounts, and two-step accounts are usually the best ones because mathematically they give you the most edge in terms of your likelihood in passing them. So right here, as you can see, a phase 1 usually consists of you making 8 to 10%, and a phase 2 usually 5% profit. If you have a trading strategy that is profitable, it's very simple to make 8 to 10% and 5% in like less than 45 days, I would say. If you're playing conservatively, if you're playing aggressively, it's probably going to take you maybe 2 months, 3 months at most. But for example, let me show you this. 100k account only costs $500. So even if it takes you 2 months to pass both of these phases right here, right? In 2 months, you spend $500 and you got access to 100k capital now. What this means is, if now you can make 3 to 4% every 2 weeks on medium to high risk, that's 3 to 4k bi-weekly, because propfirms allow you to make payouts every 2 weeks. That means every 2 weeks you're making $3,000 to $4,000 profit, which in a month is $8,000, as you can see right here. $8,000 in a month just from one 100k account. Now imagine, even if you make half of this, but you have 300k accounts, so you have a total capital of 300k, yeah, and you make half of this, so let's say you make 2% now bi-weekly, which is amazing and is very achievable. That in itself will be, what will that be? 2%, that's 2,000 times 3, 6, that's 6k a month, every 2 weeks, that's 12k a month. So 10k is very achievable with propfirms, guys. And I want to really emphasize that propfirm capital and profits, you need to maximize their utility. So what I mean by that is, if you make $10,000 in a month from trading and you make it from your couple of funded accounts, don't increase your lifestyle spendings, don't inflate your lifestyle, don't end up going to expensive restaurants, buying a Rolex, buying a crazy car that has a big deposit on it and then monthly payments, because that is very unsensible, because the end goal, guys, is to put all this money in a personal account so that a personal account can give you more returns over the long term. The end goal, remember, it's to escape the 9 to 5, not buying luxuries. Luxuries come down the line with the hard work that you put in now. Don't expect to have luxuries from spending 6 months to a year making a couple of six figures from your funded accounts, because trust me when I say this, making 200k to 500k with prop firms is extremely easy within a year. Extremely easy. If you end up doing that, you'd be very grateful that you made that much money. You need to put that money in your personal account and start growing your personal account and your track record, so that in the long term you are set for life and you have freedom. Freedom is the goal, guys, not luxuries. Always remember that. So this right here is basically what I want you to understand. On a personal account, 2% per trade risk is completely fine, because that's 50 losses that you need before you lose all your money. And if your strategy allows you to have 50 losses, something is wrong with your strategy. That means your strategy does not fit any of the criteria I am mentioning below here. 2%, if your strategy meets all the criteria down here, risking 2% per trade, it's completely doable, because as you can see, what I'm saying here is one of the criteria for your back testing is that if you risk 1% per trade, your max drawdown should not exceed 10 to 12% in all your historical back tests. What this means is, if you now risk 2%, this will double. That's only 24% max drawdown. Still nowhere near. That, like 24% is not that bad. That means 24% is like you still have 76% of your account left, right? Basically, at 2% risk, you need 50 losses to blow your account. At 1% risk, you need 100 losses to blow your account. Risk reward is very important, guys. I want you to understand. Okay, what is risk reward? Risk reward is basically, if you risk 1,000, you make 1,000. That's 1-to-1 risk reward. That's 1-to-1. 1-to-2 is you risk 1,000, but you make 2,000. That's 1-to-2. What I want you to understand is, keep your risk reward between 1-to-1 and 1-to-2. Don't go higher, don't go lower, because I have spent thousands and thousands of hours backtesting, and what I've discovered is anything less than 1-to-1 is not great long term. Why is that? If your risk reward is negative, which is less than 1-to-1, that means one loss will basically, to recoup one loss, it will take more than one win. That's not ideal. Imagine you lose one. Now it takes more than one win to come back to starting point. But 1-to-2, on the other hand, you win one, it will take you 2 losses now to basically go back to starting point, which is amazing. Anything higher than 1-to-2, what happens is your win rate drastically drops. What does that mean, win rate dropping? Win rate dropping means your consecutive losses increase, which then inherently will increase your max drawdown, which then inherently will force you to decrease your risk per trade, which then inherently will reduce the profits that you'll make. So hence, the numbers I'm showing you right now are the most ideal numbers, guys. And with these numbers, you can expect 2 to 4% per month with any half decent profitable strategy. 2 to 4% profit per month. Remember, this is average. So some months you can even go as -5, even -10. Some months you could have +10, +7. That's completely fine. But overall, your average should stay between 2 and 4%. That's the ideal numbers. So let me show you guys how do I actually make trading strategies and how do I find this edge that can fit that criteria. So we are on the Nasdaq right now, guys, and we're on the 15-minute time frame. Okay, so what do I want you to understand is trading does not need to be overcomplicated. Don't listen to gurus online that tell you need to trade from this support and resistance level, then you need to find a fair value gap, then you need to do some crazy fib level on there. No, that is nonsense, guys. Don't listen to them. Real trading needs to be simplified. The way I like to do it is mechanical. Okay, I can't speak, but what I'm saying is you need to mechanize it. So it needs to be mechanical, fully mechanical. That's how I do it. And the proof is in the pudding, guys. I've made close to $500,000 right now, and it's all with mechanical strategies. Not one strategies, multiple mechanical strategies. So I'm going to show you exactly how you can create a mechanical strategy. Okay, so what is a mechanical strategy? A mechanical strategy is basically a set of rules that if you follow them to the T, even your grandma can make money. Like if you tell her, grandma, follow these rules on the charts, and she does it, she will replicate the exact same results as you. But guess what? If you follow ICT, SMC, supply and demand, it's impossible to replicate the same trades because it's very discretionary and it's completely up to each individual on how they see the charts, how they read price, which is it's just nonsense. So look at this, guys. Let's make a strategy right now. So our strategy consists of patterns that repeat over time. In this case, what I want you to see is what do I do this day that would have made me money? Okay, so clearly selling up here. So we know that if on this exact day I sold here or here, I would have made money. If I bought here, I would have made money. So now we have to make a set of mechanical entry criteria that can be back tested. So let's do that. So I can see the selling point is more favorable than this buying point. So we'll make a criteria appear. Okay, so for example, let's do this. This time right here, for example, it's 4 o'clock UK time, London time. What that means is that is too far from New York Open. We want to keep our strategy around New York Open because that's the most volatile time. So for example, let's say half an hour after New York, just for simplification, this candle right here is a 15-minute candle after New York Open. And let's say we want to do a simple breakout strategy because that's very mechanical. We break out here out of this range. Stop loss, let's say we put in the half point of this right here, half point mark of the range, and let's say we target a 1-2-1-5. That hits TP. Okay, so now we know a winning pattern. That is a winning pattern. Now we have to repeat that pattern every single day to find out if there is an edge. So let's find the 3 o'clock candle here on the previous day. So in this case, we break out right here. Stop loss goes right in the middle. And we target a 1-1.5. And we hit TP. So if you're risking 2% per trade here, you're already up like 5%, right? Yeah, like 6%. So you nearly passed phase 1 in like 2 days here, guys. That's what I want you to see, like how easy it is to make $10,000 a month in 2025 if you really lock in and you just grind it out on the charts and find these winning patterns, right? Let's see this one right here. This is an interesting one. So we break out right here. Stop loss goes in the middle. Middle of the zone right here. 1.15. Well, if you hit here, we could have hit TP, but in backtest, I like to be not very optimistic. I just like to take the worst case scenario. So in this case, I will just say we hit stop loss and move on to the next trade. In this case right here, 3 o'clock is right here. We broke out right here in the middle of the $1.15. As you can see, this one played out beautifully and we hit TP. So guys, you see how simple it is to make mechanical trading strategies that you can very easily follow and make money with. So go ahead and backtest this. Join my free Telegram. You can message me there or in my Discord on your backtest results, and I will review it for you, give you personal feedback. So see you guys in the next video.